guys. How is everybody doing? Hello, Twitter. Hello, X, whatever your name is. Hello, YouTube. Hello, Jackson. Jackson, you want a treat? What's this? You want a treat? Uh-oh, what do you want this? I don't know. You got to come. Oh, look at that. You got to get that. Okay, Jackson. Thanks for making an appearance, buddy. All right. All right, Jackson, go play now. Go play somewhere. Don't look at me. That's all. That's all, Jackson. That's the only treats we have. Jackson, you look so disappointed. Jackson, hang on. I'm going to go. Gosh, dang it, Jackson. All right. Sorry about that. How's everybody doing tonight? All right. Been a heck of a day, hasn't it? It's time for the Daily Factor. There's 7 of you guys here. While we're waiting for people to show up, let's look at this stupid market. Might as well just check out Bitcoin. That's all that matters. Well, sure enough. And it's bouncing a little bit, but I mean, not much. And the thing is, they went through these prices. They reversed so quick today. I guarantee you, even if it gets back up here, there's people that'll take the chance to get out. I mean, I'm afraid that's what I'm afraid of. We're going to have to turn this zone to a red zone. Or I don't know. We don't know. We don't know yet. We're going to keep it yellow. It's a caution. It's a caution zone. I wouldn't be at all surprised, even if we rallied 89 or 90, that there's more people that come in and sell it. Maybe I'm wrong. Maybe I'm wrong. I say that every day. I hope I am. I hope I am. All right, let's look at the stock index futures. So they're probably doing about the same thing. Anymore, all you have to do is look at Bitcoin, and the stock index futures are doing the same thing. Yeah, they're grinding to slightly higher. The same thing goes here. All these people that got trapped in here, it sold through there so fast. I mean, maybe I'm wrong, but I wouldn't be at all surprised. I'm going to put it on the chart just to. I wouldn't be at all surprised. Even if we get up there, we need to get through there and really take out the high. I mean, there's so much technical damage that's been done. It's just, it sucks. All right. Well, let's talk about the Daily Factor. So the Daily Factor is my own proprietary metric. It's actually called the Max Factor, and it's actually a database I maintain of. Let's see how many funds are in it right now. 196, is that right? Wow, it just seemed like the other day it was 150. Well, I maintain a database of 196 high yield funds, and more on the way. Look at these ones down here in red. These are coming soon. IETH, AMYY, BITX, WPay, 9, 10, 11, 12. Yeah, WPay is coming soon. ETTY coming next year is MAYY and SOLM. So to be in the database, or to be considered for the Max Factor, like all these other ones are, you have to have been around for at least 3 months, because we have to get a few dividends paid so we can judge the yield. And then also we have to have some time so we can look at how you respond to the market going up and down. How much do you track the market? How much are you up in a good market? How much are you down in a bad market? Et cetera, et cetera. So the Max Factor is my own proprietary metric, and I made it because total return can be deceiving. Jackson, you got to be kidding me. He ate all the food I gave him. Now he's licking the plate. Jackson, just quit eating so much. It's okay, buddy. Okay? It's okay. But total return is deceiving. So I think I made a better metric. I dissected what total return is, because these high yield funds, they really pay such a high dividend that conventional measures don't really measure them that well. So I dissected the elements of total return and the elements that make up a good risk-adjusted reward, and turned it into my own metric. And we do a daily show every night, tonight we're going to specialize. We're going to kind of drill down on Nasdaq-based high-yield ETFs. I think tomorrow night we're going to do closed-end funds, and then who knows? Then I think Saturday we're going to look at SPY-based or S&P-based high-yield funds. So we have a little different thing we do every night. We usually do Tesla Tuesday. It's a lot of fun. Sometimes we do MicroStrategies Monday. So, and last night we looked at all the Bitcoin underlying the high-yield ETFs that are based on Bitcoin. In any event, let's see who else here, and then we can get this started. But like I say, tonight we have like about 12 contestants, and we're going to check it out. We have Chad here from the great state of Texas. Yeah, it is dropping pretty rapidly, Leatherface. Buying opportunity, I hope so. You know, compared to April, I don't know. I mean, April was nasty. In April, the markets from low to high, this is more like March, where we were grinding down, and in March was ugly too. And then we rallied right at the end of March, but it was a great place to sell it. And then we just dumped in April. I mean, because we ended up like 15% down on the indexes, 20 on the Nasdaq, 15 on the indexes. You know, even the so-called safe funds like Triple QI were off 15 or 20% in the sell-off. You know, and ones like ULTY were off 35, 40%. Blocks wasn't around yet, but my Lord, can you imagine what, I mean, there's no telling what it would have been off in any event. But this does remind me of March, and March came before April. But the thing is, it could be a lot worse. The SPY's only down, what, 7% from high to low? So it's only down about half of the distance it was in April. So we'll see. But yeah, maybe a buying opportunity. We'll see. Jackson putting on the winter coat. He is absolutely doing that. Okay, there's 28 of you guys here. Let's get this darn show started. I need some caffeine. This is the last night on one monitor. I'm getting a new monitor, and I'm going to be on dual monitors tomorrow night. I'll probably still forget to share the screen, and I'll probably, no telling what else will happen. It won't fix all my problems, but it should make it should make some of it better. It should darn sure make some of it better. All right. So let's meet our contestants. And we always start by going yield chasing. So let's just line it up and pick the top yield. Well, once you know it, it's a Granite Shares fund. Go figure. I mean, that's, you know, Granite Shares that's what they're known for, high yield. There is similar to YieldMax. And Defiance is also known for high yield. And Round Hill for that matter. And the first four are Granite Shares, Defiance, Round Hill, and YieldMax. So in any event, all right. So let's start with the top one, TQQY. So these guys sell options on I believe they sell options on the TQQQ. So they sell triple leveraged put spreads, and they don't have any stock, but they don't need any stock. It doesn't matter. It's the same thing as if you had stock and you did a collar. Exact same thing. Same risk, same reward, same amount of downside, same amount of upside. It's exactly the same. But they're doing it with leveraged options, so it gives them a little bit more, you know, they do better on the way up, worse on the way down. Anyway, then we have Triple QI. Now, this thing used to be my favorite fund, but really, I mean, when it came out, it was the only fund that was diversified, and it paid like a 60% yield. I really like this fund, but then as more funds came out, there's better ones out now. But back in the day, this thing was a really good fund, I thought. Anyway, this is from Defiance. Now, Defiance has gone through the same issues that YieldMax has. People griped, you know, fix the erosion. So what they did is they lowered the yield. And they've done it several different ways. They've changed strategies a couple of times. And now I believe this is a target 30% fund. So they're fixing the yield just by paying out less. That's the way, or fixing the NAV by paying out less. So, but it still says 47 because it's based on the trailing 12 month. So, but I believe nowadays this pays around 30%. I don't know that much. I don't follow it. I followed every trade of this thing for, 9 or 10 months before I gave up on it. Anyway, It wasn't that I gave up on it. There was just too much more. Once ULTY came out, then it was kind of the Cadillac. And it took about 9 or 10 months for ULTY, not only ULTY, YMAX, and other things that were more interesting. But that was a good one. That's old school. Then we have QDTE. QDTE is one of the funds that came out and was an improvement on Triple QI. This is from Round Hill. These guys were the first guys to do the only sell options during the day thing. So what that did is it made them have about half the yield as Defiance. But of course, if you have half the yield, you're going to have twice the upside. It's just math, right? So these guys stole a lot of, or not stole, they earned a lot of AUM by innovating. They innovated over the Defiance product and they earned a lot of AUM. And this one was hot for a while. And for a while, this one was outperforming the SPY. It's a good fund. I don't have any problems with QDT. But then YieldMax wanted to innovate. So they made their own version of QDTE with the similar strategy, uncapped at night, but they do a little bit different version on it. But it's comparable, let's just say. So that came out from YieldMax. And that one's yielding about 30%. Then we have the next improvement. It's just going right down the line. The next improvement that came out was by a guy named Cy Qatar over at Tap Alpha. And his sub-advisor is friend of the channel. Well, Cy's a friend of the channel too, but his sub-advisor is friend of the channel, Matthew Tuttle. These guys really have a good thing going. They sell ODTE options, and they only do it at during the day, but they also sell a little bit of stock, not much, but just a little bit of stock every month to boost the yield and make the yield more competitive. And sure enough, they pay about 14% or something, and they get a lot of upside because they're uncapped at night. In a bull market, especially in a bear market, you want to be capped at night. In a bear market, everything's opposite. I mean, you're gonna, but in a bull market, being uncapped at night is a great situation. And we're in a bull market, or we're in a trending up market, 70, 80% of the time. So good strategy. So that was the next improvement. And then we have Triple QI. Now, this isn't really trying to compete with those. These guys do their own things. This is from Neos. They've been around longer than a lot of these guys too, or as long. They sell monthly options, and that's how they uncap extra upside. And they're fully capped, but a monthly option is not as efficient of a cap. So that allows Triple QI to get good upside, and they pay a decent yield. They pay about the same yield as the Tap Alpha product and as other products. But in any event, now this is the granddaddy, the QYLD. This is one of the first gen covered call funds. And there's been better ones that have come out. I mean, but back in the day, this helped a lot of people retire. QYLD and XYLD back in the day, were good, but there's been improvements. Speaking of the improvements, JEPQ came along, also does monthly options. This is from JP Morgan. These guys came out in about 2022. Yeah, they came out in I think the end of 2022, right about the time the market bottom. Good job. I think that's right. But in any event, this was an improvement on QYLD. When it just was. JEPQ is a good one. Now, it pays a little less yield than QYLD, but a lot of people are really happy with QYLD. With JEPQ. And then kind of what happened, I think Triple QI came out and was a little bit of an improvement on JEPQ is the way this actually worked. Anyway, GPIQ, this is comparable to these other four down here. It pays about 10%. It's comparable to a JEPQ or a QYLD. And then we have Triple QX. Now, this is from Nuveen. Now, this one has been out since this one's a granddaddy too. It's been out for a while. I forget the date. I think 2014 or something. Anyway, this is what's called a dynamic overwrite. So this is another improvement on the basic covered call. So QYLD does the QYLD has the most basic pure covered call expression. That they just do that's very basic. Well, the Nuveen product, Triple QX, is what they do is based on some inputs and some kind of modeling or something. Sometimes they won't write all the options, or sometimes they'll move the strike in or out, depending on market conditions. It's called a dynamic overwrite fund. And the CBOE actually has a benchmark that does the same strategy. And so this one follows that strategy because it's dynamic. What that means is it means they're going to try to get probably better NAV return by sometimes moving the strike way out far, or maybe not selling all the options they could. And sure enough, the dynamic takes a little bit of yield off it. This one yields about 8.4. Double QA, don't know much about this one, but this is based on the equal weight Qs. So you aren't overloaded in NVIDIA when you sell options on this one. You look at the triple Qs, which have 100 stocks. And so each stock is 0.5%, right? Is that right? A half times, no, 0.2. Each stock is 20 basis points. No, that's not right. Why can't I do math anymore? Whatever, you guys can figure it out. Each stock would be 1%. I mean, how dumb can I be? Come on. Every stock's 1% if there's 100 in the index. The Nasdaq composite, there's like 1,000 in, but if it's the Nasdaq 100, which I believe what's the triple Q is based on. Anyway, so that's a big difference. So you get NVIDIA at 1% instead of NVIDIA at 8%. Once again, this is bad in a bull market. In a bull market, you want to concentrate the top performers, but not in a sideways to down market. So, but because they don't have the top performers, overweighted, it doesn't yield too much. It's only 8.3%. Then I put in EGGQ. I'm not even really sure. I just saw the Q on it, and I wanted to. I mean, it seems weird that this one would only yield that little amount. I ought to know because I did a video on it when these things first came out. I think I did the video on EGGY and EGGS. This one wasn't out yet, but let me just kind of confirm this. Seems kind of weird it would pay it'd be based on the Nasdaq and pay such a small yield, but I mean, maybe because it's a growth fund, it's more on the growthy side. They want to uncap extra upside. The max factor will look, and we'll see how they do. I mean, we judge it on an apples to apples basis. We'll line all these up against each other and see. It just pays a small yield, 5%. For the quarter, it's down 3%, but that's not bad considering what the market's done this quarter. For year to date, it's up 10.9%. I mean, that's respectable. It has AppLovin, Broadcom, NVIDIA, Palantir. So it's definitely NASDAQ based. I don't even want to say it's NASDAQ based because AppLovin isn't 10% of the NASDAQ, but it's technology based. It looks like it's their share of, the technology companies they like. Like Vistra isn't 6% of the NASDAQ. So it's their own weightings with the good companies. That's an interesting fund. If you only need 5%, if you aren't a yield chaser, and you want extra upside, I mean, so look at this April pullback. Look at this one. This one surpassed this one got above water, recapped the April pullback by like June 1st. I don't think a lot of other ones did that. I don't think triple QI, which is kind of the granddaddy of stable funds, I don't think triple QI did that. So this EGGQ could definitely have use, but of course, triple QI is paying a lot bigger dividend. It's paying almost 3 times the dividend. The dividend's a tax on the upside. Yeah, look at triple QI. As good as it is, it took it till the end of September before it recaptured I guess its previous high or whatever you want to call it. So I think we have like one more. Where is it? Okay, EGGQ. Then we have QILG. This is a Global X. This is an improvement on the other Global X. The other Global X pays 12%. This one just pays half of what the other one pays. So it gets extra upside. That's the way it's designed. Let's go see if it worked. Let's go look at it. Let's see how fast it took back its April. But in theory, when you're only paying out, remember the yields a tax on the future upside, both the NAV upside and oftentimes the total return, but for sure the NAV upside. It's this dog. It took longer than triple QI. So I don't like that because you took a lower yield and you didn't really get much. You didn't really get that good a performance. That one is not going to get the editor's choice tonight. But it was an attempted improvement. Let me just say it that way. All right. So, and what else do we have here? The last one is probably, it's the lowest paying one. I'm trying to think what it is. There's one in here that pays, oh yeah, CanQ. Now CanQ is interesting. I don't know it's really fair to have it in here. It's not really a high yield fund. It only pays 5%. They don't sell options, but what they do is they buy high yield bonds. They have a portfolio of high yield bonds and corporate bonds, and probably some governments too. But in any event, they probably earn like, I don't know, 8 or 9% from their high income portfolio. And they probably break off half. I mean, they earn 10% and they break off half of it and they buy puts on the Qs. But at the same time, they own the Qs synthetically. The reason it's synthetic's the same thing. It doesn't matter. I promise it doesn't matter. The only difference is you don't get the dividend. A fund like this isn't worried about the dividend. They're going to try to sell premium. So what they do is they buy a synthetic in the Qs, same upside, same downside. It's exactly the same. But the reason they do that is because it only costs you about a fifth as much money. So they spend about 20% on their synthetic long. Then they have 80% all this cash. And so they spend that 80% buying all this fixed income, spend part of the fixed income on the Qs. Supposedly it's the best of both worlds. You should get a lot of upside. I mean, in theory, let's see how long it took these guys to recapture the low. But the drawback is it's a low yield. So Calamos Nasdaq Equity and Income ETF. So performance year to date 6.11% for the past years. It's not doing that great. I mean, but it took back I don't know. It doesn't look as weak as some of the other ones. All right. Be that as it may. All right. So let's see who else here. You guys behaving yourself in here. We got Ethan in the house. All right. Hey, Ethan, what are you doing, bud? Which real estate ETF? I really haven't thought about that much. I don't know. I'd have to like do some research. We could have a real estate now. We could look at in the max factor. There's really not much to compare it with. I'm sure the guys in here can help you out on that. I don't know. Will WPay make it back over 50? I have no idea. I don't even look at the prices of these things. So I don't know what WPay's at now. So we'll look at that. We'll look at that in a second. But let me just, I'll look really quick. Will WPay make it back over 50? It needs the market to go up. It's at 44. I mean, it's done it before, done it before. I don't have any special knowledge of WPay, but it has definitely done it before. So WPay is most closely compared to the Qs. So let's see what happened. So yeah, so if we had the Qs go from 570 to 650. So what is that? 80 points, 70 points, 570, about a 20% rally. Yeah. The Qs go up 20%, it absolutely can. I mean, it went to 52 actually, just to get to 50. Yeah, it's just math. It just needs the Qs to go up. All right, so let's get back in the middle of this show. All right, so let's look over here. I'll answer the rest of questions later. I just came to make sure that you guys were behaving. So let's talk about. Well, we didn't. We should have looked at the price. Anyway, let's look at the price. So TQQY has gone from 18 to 16, but it pays 56%. I think that's excusable. Losing 10% on NAV and paying 56%. Like I always say, I'd do that all day long. I'd make that trade all day long. Now, it won't stay like it. It depends on other factors too. But if you could trade 10 for 56, I mean, but that means that if it drops 10 and a quarter, it's going to drop, probably 30% in a year just on NAV. So every 2 years, if it dropped in half, it might need to reverse split every 2 years. So you guys that don't like reverse splits won't like it, but still think about that. But if you could trade 10 for 56, doesn't matter for reverse splits. But if you don't want reverse splits, so definitely stay away from that one. Triple QY. This one's already reverse split once. All the high paying ones reverse split. But in any event, I'd also trade 7 for 47. That's not a bad trade. It's only dropped from 25 to 23.5 this quarter. That's not too bad at all. Now, QDTE from Round Hill dropped from 35 to 33, about 5% drop, but paying 38%. That would work also. QDTY dropped about $2, 3.5%, paying 30%. TDAC went up. Look at this. It went up. It went up 56 cents, which is 2%. But it only paid 13%. You'd probably be better with some of these other ones, really taking a little. I mean, just eyeballing it, it looks like you probably would be. But TDAC's a good one. Triple QI. This is one that I always hold out there is a steady one, a blue chip, whatever. So it's gone from 52.78 to 52.14. Even this one's lost a little bit of NAV. But, it paid 13%, flat NAV. Just on math, you could see that other ones are better. I mean, but anyway, whatever. Or have been better this quarter. If the market keeps dropping, this one will go to the head of the class. The low-paying ones will go to the head of the class if the market keeps dropping. Anyway, hopefully the market will turn around. QILD, now this one's actually up a little bit. End of paid at 10.83% NAV. That's not bad. JEPQ is actually down a little, or actually flat, and paid at 10% NAV. GPIQ is flat and paid at 10% NAV. Triple QX from Nuveen is flat and paid an 8% yield. Double QA is flat and paid a 8.3% yield. EGGQ is actually down a little bit and paid a 5% yield. That's not a real good trade-off. This quarter, you wouldn't want to lose 2% in NAV and then only get a 5% yield, right? If you're going to lose 2% in NAV, you'd rather lose 1% in NAV and get a 13% yield like Triple QI does, or maybe even yield 3.5% in yield but at least get 30% out of it. I mean, I think that one looked. There's a lot better cases to be made this quarter. Now, I mean, it's just one quarter. And then we have QILG. This one's a dog. I mean, but just doing what it's supposed to. It's getting extra NAV upside because it's only half capped. It's like a target fund. It only has to make 6%, so it has almost no pressure on it. This is like driving a 4-cylinder car. It's easier on the maintenance or whatever. And then CanQ is up a little bit, but, that doesn't look that great to me either, really, to tell you the truth. All right, so let's look at the stable decks. Which ones are the most stable? And it's QILD. And this is kind of an old-fashioned covered call fund. And the knock on it is this. They sell at-the-money options. So when you sell at-the-money options, you severely limit your upside. Most of the modern funds that improved, they sell out of the money options and enables them to catch a little upside. The thing that at the money options do well is create a downside buffer. The thing about a big downside buffer that these things create is it makes it stable as heck. Super stable. Maybe too stable, but super stable. Anyway, QILG is about market stability. It's about the same as the SPY. Then we have JEPQ. Now, JEPQ sells out of the money options, and it's a definite improvement on QILD, but the out of the money options, because what does that do? It gets you less buffer. You get a little bit less yield. So not only is your check smaller, also, if the market goes down, you don't have as big of a buffer. So it gives you more of a market performance. This one has about the same performance as a SPY. It should, go up and down about the same kind of amount as the SPX would. CanQ is also market performance, a little bit more than market, or a little bit less than market performance. It's not quite as stable. Anyway, then we have double QA is 93% as stable as the market. GPIQ's a little bit less stable than that. Triple QX, a little bit less stable than that. Triple QI is about 82% as stable as the market. Now, remember, Triple QI is based on the Nasdaq and the market's based on the SPX. So that explains some. That's probably the difference right here on these funds. They're still very stable. Triple QI. Triple QI is about 80% as stable as the SPY. QDT is about 72% as stable. Then it goes down from there. And the least stable is EGGQ. It looks like this EGGQ is trying to be a growth fund. I mean, because they have app loving in there, for God's sakes. They're taking outsized risk to try to get moonshot type companies. When that works out, it's wonderful. This last quarter, it hasn't, because we've seen companies like AppLovin just get their butt handed to them. I mean, those are the kind of companies that are in ULTY and LFGY and, those kinds of companies. So anyway, different funds for different market environments. TQQY from Tap Alpha. This one's probably only half as stable. For one thing, it's based on the Nasdaq. For another thing, it's based on the triple leverage Nasdaq. So we can excuse it for kind of being a hot mess. All right, which one do you guys want to win? Which one do you guys pick? I'll look down here and get it. Dividend set, execute order 66. All right, I like four cylinders too. I'm trying to make better parallels. A fund that pays a really high yield, it's also, it's all harder to maintain the NAV. It's the same thing as driving a 12-cylinder Ferrari. It has just more fun and more upside, but also more, risk and more maintenance. But I think you guys get that. I wasn't knocking four cylinders. I mean, anyway, Josh Allen just got hurt. Oh gosh, I forgot to set my lineup. You got to be kidding me. Hang on. Let me make sure I'm not starting anyone. It's too late to do it. Let me make sure I'm not starting anyone that's injured. Luckily, I'm not starting Josh Allen. I forgot to check my lineup. It doesn't look like I got Dak Prescott a quarterback. CeeDee Lamb's a wide receiver. Xavier Worthy, who's questionable this week. But anyway, I'm not starting anyone who's injured or something. Okay. Oh, and he's back up anyway. I just saw that. He's back up. Okay. So what the heck happened to WPay? Well, probably the same thing that happened to the market. I mean, WPay has, tech stocks in it, basically. Tech and then it has a little bit of leverage. So I don't think anything did well today. But yeah, WPay though has been holding up pretty well, all things considered. Better than some other things, let's just say. We've already talked about that. I was down 2% today. And the max factor pi is down 3.4. I'm sorry, that sucks. Okay, yeah, we don't know about real estate ETFs. Dylan's in the house. Hey, Dylan. Talk to his Marcus here. He can answer that. But there's another one called XV that's a brother company of SBAR. And it actually gets a little bit more upside, but it pays less of a yield. On CAIE, there's a whole suite of those coming out. From, I forget the company, maybe, I don't know, one of the companies, type in auto-callable bonds, and somebody's announced like 50 of them coming out or something. So I think it may have been Innovator or something. I'll look into that later for you. 5,000 shares of Tesla. Have had it 2.5 years. It's always paid. Maybe time to replace it before the split. You like TS2? Yeah. TS2, Robert, is a good-looking fund. What do you think about old TSLW? I mean, a lot of people like the Roundhill ones. It's going to be a little bit more risky than TS2. If you want to de-risk, TS2 or TSLP. If you really want to de-risk, I mean, Howard will take care of your money. No guarantees. I mean, if the market keeps going down, that, so will TSLP, but not maybe as fast as the other ones. QYLD AUM is sinking. Well, QYLD, it's like I said, they haven't innovated. They were the first one that came out. A lot of people loved it. But then once JEPQ came out, people jumped to that. And then once Triple QI came out, people jumped out of JEPQ, even though JEPQ still has billions under management. But you know what I'm saying? They're innovating. And I bet you TDAC and T-SPY have taken assets away from Triple QI. It's just they're innovating. We're seeing the same thing happen to YieldMax. YieldMax was the greatest thing going and had tons of assets and still does, but some of their funds are just getting rated by these new funds that come out with a little bit better variation. All right, I don't know what execute order 66 means. All right, you're down 14.7% on WPay. I mean, to tell you the truth, I mean, we could trade war stories here. I bought WPay the last day of October. But luckily I paid for it with huge profits in other stocks. But because I sold GPTY at like a 30% profit, and I dumped out of some ULTY at a 21% profit. But yeah, I bought it the last day of October. Let's see how I've done. And yeah, I should have kept GPTY. Of course, I didn't know the future. GPTY is the best fund out there right now. I mean, I think, all things considered. Yeah, look, GPTY would have held up better. But anyway, yeah, I feel your pain. I'm down 11.6%, and I'm dripping it. So I'm down 11.8%, because when something's going down, the drip doesn't help. I mean, until it turns around, and then so yeah, I feel your pain, man. I feel your pain. All right, so let's get this show on the road. Let's finish this off, and then we can talk. All right, so I'll make an editor's choice after here, because there's no way QYLD. I mean, it's okay. So QYLD, it yields 10%, and its NAV is positive. It's up 3% on NAV. It yields 10%. That means it probably has about a 14% total return for the quarter. That's pretty dang good in a quarter that's been as rough as this had. So, but I'm just kind of throwing shade at it. The reason I would probably prefer TDAC. It has a little bit less NAV return, but it has a little bit more yield. But the reason it's not number one, though, is because it also factors in the risk. And TDAC is legit twice as risky, if not 3 times as risky as QYLD, meaning it moves up and down 2 to 3 times as much. Meaning it doesn't mean it's not, it doesn't mean it's bad. It doesn't mean it's good. It just means it's volatile. So, I mean, the max factor is going to put QYLD up there, but I'm going to editor's choice it, and we're going to editor's choice something in there, something else in there. Well, I'm going to editor's choice TDAC. I mean, come on. It yields a little bit more, and you get a little bit less NAV return, and it's a little bit more risky. But I mean, editor's choice is TDAC. But just on the math of it, QYLD does have good math, and that is kind of sad, because when things that are super stable like QYLD start winning the max factor, it means the market's pulling back. The ones that pay the lower yield and that do the more stable type stuff get ahead. I like it when the market's blowing up. If the market was blowing up, QDTY or QDTE would be ahead, or something like that, but in this environment, these are like running, 12-cylinder Ferraris, and the price of gas is going up every day or whatever. They just aren't as efficient to run in this type of environment. So we get our little four-cylinder Toyota Tercel, and it's just running like a top. There we go. But yeah, TDAC is editor's choice. Tap Alpha does a good job. I like Cy Qatar. I need to have him back on the channel, and of course, I like Rob a lot. All right, so yeah, I feel your pain. You must have got it. I must have got it a few days after you. Yeah, that's definitely why WPay's down. They're all down. Oh, Tuggin is a better bet. I wonder if I should have put Tuggin on here. I didn't catch it. I mean, Tuggin probably could have been on here. I'll make sure to put it on the SPY Saturday. We'll compare it to the S&P funds. So Tuggin to what? Double QH or triple QH? That's we looked at those yesterday. That's a hedged equity fund. Let's just run it and see. Now that's okay. That's since October. Nothing's done well since October. Let's run it for a quarter. Let's see, July or August, September, October, November. Yeah. Well, it's not. It's like the 20th. Okay, let's run this baby. I mean, over the past quarter, Tuggin's been better. Better results. Now, Tuggin pays a kind of a tiny yield, does it? So does Triple QH. It looks roughly the same. That's a toss-up. If you want stability, go with Triple QH. Neither of them pay a super high yield. If you want more chance at upside, go with Tuggin. Maybe Tuggin in a bull. If you knew there was going to be a bull market, you'd go with Tuggin. Tuggin did better on the way up. If you knew it was going to be a bear market, Triple QH might be good. Yeah, but I'm fine with TDAC getting the win. The max factor, though, I mean, when I look at those numbers, I do understand why the max factor put it there. That's pretty darn impressive what it's done. To be up 3%, pay an 11% yield, and be 60% more stable, meaning less volatile than the SPY. I mean, that could have a role in someone's portfolio. Toyota Tercel was your first car. My girlfriend in high school had a Toyota, forget what it was now. It was the same model as the Supra, but it was the unsouped up Supra. So it was a hatchback. It was a 4-seater, but a small back seat. What was that car called? Is to say, the Supra was the upgrade version of it. Anyway, and then I had a girlfriend at college that had a Supra. Well, she had the Supra in high school, but I wasn't dating her. But that was a cool car. But then in college, she got a Corvette. She had an '84 Corvette. And then a white BMW. Her dad was in the oil business. They had a plane and all kinds of stuff. All right. Check out XXV. XXV? What the heck is XXV? All right. Let's just run XXV for the quarter. Well, it just started. Looks like it just came out. All right. Well, let's see what it is. I hadn't even heard of it yet. XXV, huh? I mean, it's some kind of 15% target fund maybe, or 25%. Okay, I'm not good at Roman numerals. That's right. So it's the Simplify Target 25 distribution. Okay, we're going to have to look this one up. We are going to have to click on the link. Usually you can click here and it takes you to the page. Now the link's not working. Let's see here. XXV ETF. I mean, 25% is pretty good. I don't know who this, and this may be the sub-advisor. And or this, I'm guessing. It could have been converted from a family office, or this could be some guy's name or something. So the Simplify, whatever that is, and Corrado, Target 25 distribution seeks to provide high monthly income. Target distributions 25% after fees and expenses. This is an aspirational goal, not guaranteed, correct? The primary investment strategy is through the sale of barrier put options. Okay, yeah. So this is similar to SBAR. It's like SBAR. I think SBAR has like a 30% barrier. XV is a 15%. So this one's like kind of in between. Huh. Interesting. So right here, let's see here. So this, worst of fund. Okay. Well, I'm trying to decipher what that means, but I just want to know what this Ancorado means. Is that probably have to look somewhere to figure out what that means. Huh. Okay. Well, did you do this? Maybe it's Simplify that's coming out with these auto callables. Some companies coming out with a bunch of them. Maybe it's Calamos. Maybe they're adding to the CAIE. But I didn't think it was Calamos though, that somebody like had a whole slate of them coming out. I don't know. You guys can Google that. Sure wish I had some of those auto callables. When I made that money selling GPTY and part of my ULTY, instead of buying blocks and WPay, I should have bought some auto callables, shouldn't have I? Woulda, coulda, shoulda, but I was greedy. I wanted that. Blocks. Blocks is amazing. So's WPay. Let's see how bad my blocks has done since I've had it. I bet it's done. Oh my gosh. Because I bought it the same day, the last day of October. Woo. I'm gonna get on Twitter and start telling David Nicholas he doesn't know what the heck he's doing. I bought this fund and I'm down 25%. You don't know what you're doing. You need to manage this actively. Roll those puts. All right. I'm just joking if anyone thinks I'm serious. All right. Celica, exactly. Toyota Celica. What's 5% SQQQ? Oh, for a hedge or something? Oh, who had a red and green? Oh, you had a Tercel, red and green Tercel. If you ever notice, Toyotas are always C's, right? Camrys, Corollas. For a while, it seemed like every one they had was a C. But there's ones that break the trend. But it seemed like for a while that they were all the Celica, Camry. I don't know. Maybe that's not right. It sounds like something I thought of back when I was drinking in it, or whatever. But all right. MK2. What's an MK2? Like, is that a Toyota? An MK2? Another would be Ray's Fund. AL. Oh yeah. ALLW. Let's go look at ALLW. I saw Ray Dalio speak this morning on Squawk Box. I like him. He's a smart dude. This is his all-weather strategy. Let's see how his all-weather strategy's been doing lately. I don't care who it is or how smart he is. No strategy works in all markets. I mean, this one is impressive. I mean, just by looking at just over this short time frame. I mean, you drop from 25.50 to 23. I mean, that's nothing. So it outperformed. Definitely didn't get all the downside. Recaptured its high and it's been blowing straight up. And yeah, how much is it down right now? It's down from 29.5 to 28. So it's down $1.50 on. Yeah, on third, about 5%. So, anyway, so yeah, it's doing well. It's down a little bit less than the market. Let's see how they do it. They have some 35% money markets. That's good. They have the SPYM, Spider Momentum. I think that's what that is. Boy, that thing's not doing really well lately. I mean, because there's no momentum. The momentum's in the opposite way. But I'm sure that's what he does because he can get a little bit more bang for his buck out of this one, and then that saves him money to put in, guaranteed stuff like T-bills and other stuff. Then he also mixes in a little SPEM, whatever that is, emerging market maybe. Yeah, S&P emerging market. So that gets him some foreign exposure. Then he has some, what's TSYINFL? It's TS, some kind of bond or something. Maybe a Taiwan semiconductor bond, a corporate bond, maybe. Then he has a U.S. Treasury bond and some other corporates. Yeah. It's a good-looking fund. What kind of yield does it pay? No yield. It's a growth fund. It looks like a growth fund. All right, that's a good one. That's a good suggestion. Omaha's doing a great job protecting your family account. Well, man, I'm glad to hear that. I am glad to hear that. Why didn't I buy Omaha on the last day of October instead of – I mean, I know I bought blocks because I'm greedy. And I saw you guys making money in blocks. And I'd actually bought blocks in the 1st of October. I bought blocks. I had a little bit of blocks before, but I doubled down right there at basically the highs. Oh, well. All right. I was going to try to look at something, but we'll keep looking at your stuff. I'm not feeling bad about blocks because I'm kind of joking too. I mean, if I knew the future – I get so triggered by the people in Reddit, especially. You guys don't do this, and really the people on Twitter are good too. I'm not talking, but the people on Reddit they lose $5 and it's the fund manager's fault, and really they bought it an all-time. They don't realize what they're even owning. Anyway, whatever. All right, hey, trucking for dividends. What are we tomorrow? Bloodbath? I mean, I don't know. I mean. I don't know that we don't. I mean, I hate to say it, but I don't know that we don't need. Sometimes, whenever you keep falling down like this, you need a bloodbath to stop the falling down. What do you think April 3rd, 4th, and 5th was? I mean, those are some nasty down days. And we haven't had one day yet where on CNBC it says markets in crisis. I could see tomorrow being a markets in crisis day. It's a Friday. I mean, we're down on the week, and if we keep going down and people dump their, I mean, I wouldn't be surprised. I mean, I'd definitely say this. I'm not going to do anything in the morning. if I buy the dip, I'm going to wait till the end of the day because I think there's a chance we'll be lower than we are now. But the way to figure it out is just follow Bitcoin. I mean, Bitcoin's been leading the way. Let's see what BTC is doing right now. We'll look at Coinbase. But if Bitcoin takes out this low overnight, which it looks like it's about ready to do it now, it's taking it out, it looks like, then the market will gap down. Sometimes, though, if it's a big gap, it's the opposite of the gap we had up today. A big gap could trap bears. Maybe if we rally and fill the gap right away, and by 10 o'clock we're on the other side of the gap, maybe, we could have a rally day tomorrow, but I'd say 60-40 that it's going to be a down day tomorrow. I mean, and the thing is, even when we do have a rally, I really should have used this last rally to line up. I'm greedy, and I want to catch that Santa Claus rally. But when I should have, when it opened this morning, all I was thinking is I was going to buy something. What I should have been doing is using it to sell half my blocks. I have too much blocks. I'm like 13% in blocks. I could have cut that to 6.5, raised some cash, and then bought. I like blocks, but it's killing me. It's absolutely killing me. That's why I had to sell ULTY. Granted, I had a large profit. But with the market going down every day, I didn't want to give back all that nice 21% I'd earned in ULTY. So I sold a third of it, and then I sold another third of it. But but it was less the second third. So altogether, that equals about half of it. I'm half my original size in ULTY. But you have to trade the chart that's in front of you. I like ULTY. I'm not married to it. I like blocks. I'm not married to it either. But, I might even think about, even if we do get a rally tomorrow, using it to lighten up on something. But the one I'm probably going to do is blocks, or maybe BITK. If crypto's really going down to 70, I'll probably just dump BITK. The next time we get a rally, I need to dump BITK, and then I can always buy it back. Maybe I should dump BITK and half of blocks. The great thing about being a trader nowadays is there's no commission. So you can trade like a hedge fund. Hedge funds, people on Wall Street don't have a commission really. They pay fees and stuff. And so for years, that was always their advantage, that they could react to stuff instantly. They had the news instantly. Well, bingo. Now it's all a level playing field. We all get the news at pretty much the same time. And there's no commission. So there's really no danger in selling something. So what if I'm wrong? I have to buy it back. It doesn't cost anything. There's no commission. But in the old days, if you're trading in and out, it's $50, $50, $50, $50, $50. All of a sudden, you've taken, 300 basis points off your, or 500 basis points off your return for the year. So, I'm probably going to have to sell something in the next rally if this doesn't improve pretty quick. Tax harvest to protect more capital. Yeah. All right, trucking for dividends. Good news. Grabbed another half Bitcoin. Yeah, absolutely. When markets pull back, it's great news for people that have cash on the sidelines, and it's great news for people that didn't just buy like a month ago. If somebody's been in Bitcoin for a year, they don't want to see the pullback, but they're still fine. And if they have cash on the side, yeah, absolutely. They do create tax events. That's correct. They do create tax events. Right now, I'm not worried about taxes either because the fund's down on the year, and it's looking like I'm going to be. I don't think I'm going to have any capital gains. I might if the market would rally, but right now on the year, I'm down like 5%. I was up 13% at the end of September. But I've bled it. I've bled it all. I've lost anyway. They do create taxable events. That is correct. So. But in the old days, you had taxable events plus $50, $50, $50, $50, especially on a small account. If you're on $1 million account, it's not that big of a deal. You go to a discount broker, but even still, commissions would add up. But if you're trading a $10,000 or $20,000 account and you're trying to sell option spreads, trying to sell two-leg option spreads, so you're selling put spreads. Well, even if you got a broker that was minimum $39 or something, still $39 every time you got in, and it just, you just literally in the old days, you couldn't compete. Nowadays, it's the playing field is way more level. But yeah, Dylan, that's great. I'm glad you got it. Dividend Degenerate, DD's in the house. You didn't really miss much. We talked about the Q funds. Here, I'll recap it really quick for you. Q Yield 1, or QYLD 1, I'm sorry, not QYLD from Global X1, but I kicked it out. I made an editor's choice of TDAC. TDAC does a great job, but any of these ones in the top 4 could work for you, maybe, I guess. Maybe not CanQ or QYLG. Forget about that. But QYLD, TDAC, or JPQ, any of those 3 could possibly work, or none of them. Yeah, it is. It was a lot of drag. You just, I saw because I saw the 87 crash coming. I haven't just become a panicking. I've been watching the market pretty much every day since probably 84. When I wasn't and in the summer every day and stuff, from the time I was 16 or 17. And I read the paper and looked at the option quotes every night and the stock quotes. And the 87 crash, I saw a mile away, and so did a lot of other people. And I tried to talk my dad into letting me sell my stock. I wasn't 18 yet, or I wasn't 21 yet. It's still under both of our names. He wouldn't let me. And I was right. The market did crash. But capital gains tax was like 25%. So I would have had to the market would have had to crash more than 25%. And I would have had to buy it back before it went back up. He wouldn't let me do it because it was a taxable event. And yeah, the market did crash like 30%, but it V-bottomed and went right back up. Yeah, it was a good lesson that you can't, anyway. All right, DD. So what are you saying here? Probably doing bear call spreads on Qs next week. We'll see. Maybe we'll start putting in higher lows and maybe the flows will get better, but I'm just going to have to, the market is guilty until proven innocent, and I'm going to take my cues from Bitcoin. That's what I'm going to do. Hey, what's up, Marcus? Have you been here the whole time? Yeah, you've been here the whole time. All right, Marcus, who's the company that's coming out with all the auto callables? I didn't think it was Calamos. I thought it was like Innovator, the hedged equity company, and they have like a whole sheet of them. Maybe they aren't out yet, but I've seen it. Yeah, you're checking. All right. Anyway, but somebody's coming out with just a whole slew of them. Maybe it's, and like I say, I think maybe I saw a proposal somewhere. Maybe it's a filing at the SEC, but I figured you might know. Yeah, Innovator. Okay, let me just do a Google search and see what auto. There we go. ACEI. Equity Auto Callable Income Strategy. Oh, this is cool. Constituent snapshot. So they show you. So these guys are doing, instead of doing auto callables on the market, they're doing auto callables on individual stocks. And you can see like Oracle's already blowing its callable, because if it's under 30%, it's not, they don't have the other side, the other party doesn't have to pay it to you. It's a little bit more complicated than that. It has to be under 30% on a certain date. Go to Discord and ask Marcus. He knows all about it. I mean, this stuff's confusing, but so look at this. So the weighted average coupon's 14%. Right now there's 100% of the auto callables in the payable zone. I think even though Oracle's underneath the line, it's not, it has to be underneath the line on the next observation date, which is the end of this month. If Oracle doesn't recover by November 30th, the counterparty doesn't owe you interest. They don't owe you that 14% on that one bond. Now they're separate bonds. They have tranches. They also have Apple. Apple's doing fine. It's actually above, its issue price. Google's killing it. Google would have to drop 40%. See that where it says distance from barrier? It would have to drop 40% by the end of the month. But if any of them are under the percent, I guess the 30% at the end of the month on the observation date, boom, then your yield will go down. Not only that, these also trade in the market. These trade in the secondary market. So other people, the market makers, watch this. And if these all start sucking, the price will sell off also, because the portfolio of bonds will become less valuable if it looks like they're going to start paying less interest, because a lot, so, so it's like anything else. It won't keep you from losing money, but these tend to be a lot steadier than stocks. Let's just go look at that. Let's go look and see if I would have got, instead of being greedy, instead of getting blocks or WPay, why didn't I get CAIE? Marcus has been telling me forever. For one reason, I don't get it because I can't say it. CAIE. I can't say it fast. Yeah. Look at me. Look at that. Look how that greed helped me out. My gosh. I love blocks. I don't care, but I wouldn't have touched it with a 10-foot pole if I'd known what was going to happen. I didn't know. Anyway, or I would have still touched it, but I would have waited a couple of weeks. I mean, I don't have a problem with blocks, but I mean, that's on me though, right there. Cause Marcus has been telling me forever, just go buy these auto callables. Anyway. But yeah, so I think these products are interesting because instead of being based on the index, they're based on individual reference assets. That's pretty cool. So full maturity. Oh, this shows you, this is how long they last. These last like 3 years, I guess, because not callable, not payable. Anyway, I don't fully understand these, but they probably have a white paper, whatever here. But anyway, so let's see what else they have. ETFs. So defined outcome. This is a good company. I love some of these ideas in here. That Q hedge is really interesting. They don't have a lot of income. I mean, here's their income right here. They have ACEI, which is auto callable, ACII, which is an index auto callable. Then they have SPUT. SPUTs, I mean, I just don't know about SPUT. I mean, it's all right, I guess. These guys don't specialize in income. They really specialize in what their best product is. This, the 100% buffer ETF is amazing. I can't even believe this exists. You can buy this and you cannot lose money. You cannot lose money. Now what? Oh, I thought it said no cap. It says to a cap. Okay. Yeah, 100% downside buffer. So there's different ones. You can either buy it a 6 month, 1 year, or 2 year. But if you hold it the entire time, you're guaranteed not to lose money. They buy and at the money put, and they sell calls. They put on callers. They do the same thing ULTY does, but ULTY doesn't do callers like this. ULTY does callers where you can lose a little bit. If you put the callers too close, you kill all your income. ULTY could. I mean. But it's the same strategy. They sell a call, they sell an out of the money call, and they buy in at the money put, and it just shuts off all the downside. And the put doesn't bleed because you're selling the call, and so the call bleeds into your account from the person that sold it to you. So you buy the call to decay, and it supports the put, and you can't lose money. Now the bad thing is that you're capped. You're really capped. Let's see if we did like on a 2 year, or let's do on a 1 year. Well, here's the cap right there. See that right there? So right now we're in November. So we would get Z in OV. We have to hold it a year. I guess it started last November though. So it's probably about ready to expire. But this line right here, the blue line is what the market's doing. The market's getting crushed right now. I mean, but this line right here is what the thing's doing, and it's right about where you bought it. And at the end of the time, it'll be right on where you bought it. So, but you could see the NAV is just steady straight across here. So that's the good news. The bad news is the most you can make is 6 or 7% on the upside. So these cost you money in a bullish market. You buy this in a bullish market. Well, good news, you can't lose any money, but bad news, all your friends are up 30 or 40%, but you made 6%. So it kills compounding because there's no free money, but it's an interesting idea. I just think it's interesting. Because if you knew for sure, like if you knew for sure there was a bear market coming, you could get this and you wouldn't have any worries. Yeah, that's an interesting company. All right. All right, let's see. I'll answer that question in a second. Let me make sure I haven't missed anything. Yeah, ask Marcus about barrier. Marcus is the barrier and auto-callable expert. Go to Discord and hit him up. He's also a moderator in Discord. If you want to join our Discord, you have to apply and you have to talk to Marcus. Marcus is our BS detector. He can sniff out if you're a troll. All right, so you guys are just talking amongst yourself. All right, so this one. Have you ever seen, have I ever seen a market like this? Yes, it happens all the time. Earnings hit, jobs added, total disaster. Well, I shouldn't say it happens all the time, but lots of times, even if market, okay, in a healthy market, bad news is good news. Even if people miss earnings, but the market's trending up and stuff, they'll say, not forget about miss earnings. Even if like the job numbers comes in weak, they'll go, well, the good thing is Powell's going to have to cut rates next time. So the market rallies. Market rallies on bad news. It rallies on good news in a healthy market. In an unhealthy market, it doesn't. It sells off on good news. The opposite comes true lots of times. And we just aren't in a healthy market. But yes, I've seen markets like this before. I've seen markets a lot worse than this. We're only down 7% on the SPYs. It could get, if the SPYs were to drop as much as Bitcoin, and which I wouldn't be surprised, the SPYs would be down 20%, which would be like an April level drop, even a little bit more. I'm not predicting that, but it could get, all I'm saying is it could get a lot worse. We've really been lucky in the SPYs so far. But it's just kind of a bad sign. Whenever, like today, the job numbers were good, but what did they say? They said, oh, now Powell's not going to have to cut rates. And so the market sold off. The market uses good news as an excuse to sell off when it's not a healthy market or when it's a bear market, a downtrending market. Can I put Discord invite in chat? How do you have a Discord invite? I didn't know an individual person could do that. I thought I had to put one in there, but I thought one of the mods did. But anyway, if you have a Discord invite, sure. I thought I disabled invites where I had to. I don't know how that works, but yes, if you have one, absolutely put it in chat. And like I say, post it, but I'll post it. Let me post it. Yeah, I got you. You were asking me to do it. I'm sorry, Dylan. I misunderstood. Yeah, let's go do that right now. Yeah, I think I have to generate it because we had some trolls in here. So let's see this. Invite people. What does this say? Bypass join applications. New members joining through this link will join immediately without going through the application. No, I don't want that. I want you guys to have to apply just so the trolls don't get it. I was forgetting to check that, and that's why the trolls were getting in. My gosh. All right, well, so now all it is you have to go in there and you have to talk to Marcus. You'll apply, and then Marcus will, or somebody else. It could be Mark. It could be SB. It could be BR. It could be, I have four or five dudes in there. But let me make sure I did that right, though, because I unchecked it, but I don't know if after I copied it, I unchecked it. So let me go do it from the start. Invite people. Yeah. Oh, no, that's on bypass. I don't want bypass. You can't take me anywhere. I do stuff too fast. All right. Invite people. All right. So it's not on bypass. So yes. Okay. That's what we want. All right. Here we go. But yeah, there's a lot of good. If you have option questions, there's a guy in there named Scramble Anything, but also SB can answer questions, and so can Mark, and others. But then on auto callables and stuff like that, Marcus is the man. Ethan's in there. He knows. I mean, we got a lot of good people in there. We have a good time in there. Yeah, I know I was backwards. I know it. I almost gave away the house. I know it. Like I say, I tried to do stuff too fast. All right, guys. Well, if you don't have any more questions, I'm going to get out of here. I have other stuff to do. The Bitcoin just made a new low. Before it was like on a low, but now it's underneath it. So I guess we'll go back and look at that. Let's see if it's taking stock index futures down with it yet. Well, not yet. The stock index futures aren't on a new low, but the way it's been working lately, Bitcoin leads by, half a day, something. If Bitcoin stays down, stock index futures will go on a new low too. So we're at 8. I'm showing on Bitcoin on Coinbase, basically 86.1 right now. Well, more like 86.5, or not 86.5, but 86.050 basically. So almost at 86. If it keeps dropping, we're going to be at 86. All right, so Pete and replete were in a boat. Yeah, we talked about that last night. I can't believe I said replenish. I wouldn't be surprised if replete's maybe that's where replenish comes from. Probably not. I just made it up. Yeah, you've heard a lot of margin calls will be triggered. I wouldn't be at all surprised. Bitcoin to 77. Yeah, it's what it looks like. It's what it looks like. I was just hoping for 90. But I was also hoping for 105, because that's when I bought BITK. I don't know. I got to make a tough decision. I probably just ought to dump BITK. It's only 5% of my portfolio, but it's killing me because it's uncapped at night also. If it was a regular covered call fund that was capped all the time, it'd still be killing me, but it'd be killing me a little bit less. But since it's uncapped at night, it pays, so it's catching all of this downside. I would have rather had them sell calls right on the close because it locks in the price right there. Then, anyway, time for you to buy another Bitcoin. Yeah, another 1/100th of a Bitcoin. It's a good one, Froggy. What's a good one? Have you? Yeah. Yeah, Winter and YQQQ are doing well. I hear you. I hear you. I know. I'm shaking my head too. I mean, like I said, the good news is we're probably closer to the bottom than the top. The bad news is just going by Bitcoin, it could get a lot worse. All right. So what are you talking about, trucking for dividends? So glad you went to cash from WPay before the NVIDIA earnings, even though probably right after the earnings, you probably felt bad for about, half a day. You're probably like, darn it, why'd I do that? But then look, it turned out to be a smart move. Good job. Good job. You got killed in QLDY, but QLDY is holding up better. Be glad you don't have blocks, or be glad you don't have ULTY, or be glad you don't have ULTI or something. I mean, there's ones that are doing way worse than QLDY. They're all going to get killed in the down market, but you're doing better in that one. I wonder why QLDY wasn't in the thing tonight. Is it, how many months old is it? Is it old enough to be in the max factor? Let's see. I would have definitely made QLDY the editor's choice if it was in there, depending on what the numbers were. But let's go look and see how long it's been out. October, November, December. No, it turns 3 months old in December. So, all right, no QLDY. You think the market fundamentals are not too bad? Yeah, hopefully we're near the bottom. Yeah, I agree with you. Hopefully we're near the bottom, and the market isn't totally 100% related to Bitcoin. So just because Bitcoin's down 25, 30% doesn't mean the market should be also. But I'm just saying, if the market plays catch up with Bitcoin, even if it drops half as much as Bitcoin, it could get uglier before it gets better. But yeah, the fundamentals, I mean, that's all of the stuff I'm hearing too. I mean, but I listen to a lot of Tom Lee, and I listen to a lot of people talking their book. I mean, there's people on Twitter talking their book, that are saying it's all the fund managers are saying it's all right. Anyway, Curve has less volume. Check out MS. What do you mean MS? You mean MSFY versus MSFT? Yeah, I thought that's what you meant. This is just since the end of October. everything's down, but true to form, the cover call fund's down a little bit less because it creates the cover calls do create a buffer, but they still caught about 80 or 90% of the downside. But let's go back the first of the year. Man, I'm getting tired too. I love these live streams, but I haven't done any original videos in a while. I have some good videos planned, but I'm just too tired after I get out of here. And then I get up in the morning. I need to do some original videos. I have some really interesting stuff to talk about and show you guys. So true to form, cover call funds do a little bit worse on the upside and a little bit better on the downside. And that looks like that's exactly what MSFY is doing. You know, if you need growth, you definitely want Microsoft. If you want some of the upside and some of the downside of Microsoft with a little bit of yield, you probably want MSFY. What's the matter with what is there a competitor to MSFY? Does I guess Curve doesn't have one, do they? Well, MSFY. I guess MSFO. Who's MSFO? I get it mixed up which company's which. Oh yeah, one of those is Curve, and that's what it is. MSFY is Curve, I think, and MSFO is Yield Max, but it's the one that I guess or something, because it's the one that's opposite of what you would think. I can tell by looking at the results what the company is. So MSFY on the whole year is only down like nothing. Or wait. It went from why is MSFY so high? Oh, that's the share count. Okay. It went from 24 to 25. So that's got to be Curve. And this one that dropped a couple, this one's got to be Yield Max. Plus, you could tell because the dividends on Yield Max are way more. This one paid 4 on 18, and this one paid 4 on 25. Yeah. What about MSFW? I mean, probably hasn't been out as long, but this one should even do a little bit better on the upside, but worse on the downside. Unfortunately, we just had downside, so. That's a pretty good look for Curve right there, protecting capital better than MSFW. It's just because of the leverage. Yeah, no, I got you on the large position. Yeah, it could be the inflation report in December. True. I was a little afraid that this morning's report would crash the market. Would make it really sell off. So far, it's just kind of grinding down. But the report this morning was good news. It was good news. The jobless claims didn't work. The news was good, but then the market perceived it bad because then people started saying, well, now Powell's definitely not going to cut because the jobless number wasn't bad. So we're just in the good news is bad situation. Good news is bad news. The market's interpreting what otherwise should be good news as bad news. Just kind of the sign of a weak market. Yeah, the market's a mental patient. You definitely never know. Tom Lee indicated there was a glitch. Yes, we were talking about that. Yeah. Yeah, Roxanne, thank you. We were talking about that on the afternoon show, weren't we? It may have even been you here or something. Then he also said it should bottom at 77. Yeah. Why can't it bottom at 90 or 86? There's also should be buyers there, but there wasn't. So just because you draw a line on the chart where there's been buyers in the past or where there's been support in the past, the market, the market doesn't care about your lines on the chart or my lines on the chart. Yeah, MSFW, I got you. Yield boost protective puts kicked in, lost much less than the underlines, and still massive yield. Yield boost protective. I didn't know yield. Who's yield boost again? Is that Granite Shares? I didn't know Granite Shares had protective puts. I'm all about it. I'm glad they do, but I thought they just sold put spreads. But anyway, that's awesome. That is awesome. All right, bot calls too far out of the money for NVIDIA earnings. Yeah, don't you hate that? Granite was 5 cents, and it was the 5 cent, and it was a 237 strike. You're hoping for a big, you're hoping for even a bigger move, And what you needed, you needed it to open there and to go up the rest of the day, and then you might have been in business. But when it opened there and sold off, it probably, MSTY is on a 52-week low. Yeah, that sucks. All right, side note, I remembered that Bitcoin and Ether are also in GAX, which is going weekly next week. I might need to trim some blocks. Yeah, I might need to trim some blocks too. You know what else is going weekly soon? And none of you guys like this, but I don't think, but maybe on a weekly you might. It'd be a competitor with, it pays 12%, but Big Y. It'd be a competitor with T-SPY and TDAC and those kinds of things. It should be really steady. I mean, Big Y is beating a bunch of stuff right now. It's curve. Okay, I got you. I figured it out. It just seems weird. Once you think MSFY would be yield max, and you would think MSFP would be curve because they usually end at P, but I bet that was taken or whatever. So they have so yield max got MSFO, and I guess somehow curve got MSFY. So ULTY's holdings look like GRNJ. Yeah, they are small caps and probably high beta names. And yeah, I could see that. I could definitely see that. Mostly sellers. Yeah. YSPY doing good. Heck yeah. I had YSPY and I was happy with it. You were holding some 190 put options in the queues and managed to close them for 40%. Just to watch them. Doesn't that make you mad because you thought you're doing well at 40% and you probably could have closed them for 100% or something at the end of the day? I don't, or 50%, whatever. You could have closed them for more. Yeah, I hear you. Yeah, yield boost Granite shares. Okay. So, yeah, I guess they do it. They have protected puts. I mean, I could see that because what they're running a collar. So, so it's a synthetic collar. They just don't have any stock, but they don't need stock. It's the same difference. So when it goes under that bottom strike, they're capped, which is good. That is good. It's good what they're having. I don't know why I said they didn't have protected puts, but they absolutely do. They absolutely do. All right, guys, I'm going to get out of here. I'm also hungry. I'm going to need to go get something to eat, and I'm going to try to work on some, and Bitcoin's still dropping. We're at 85.4 now. But I'm going to get out of here, go make something to eat. I'm going to try to work on this content. I have some great content. And so tomorrow I have some stuff coming in the mail that I need, an adapter, and I have the monitor already. So I'll have the second screen going, and we should be just kicking ass tomorrow. Kicking ass and taking names. All right, guys. I'll get some good rest. This was a good show tonight. Man, last night's show was crazy, like 2 hours and 45 minutes. I mean, I liked it. But anyway, I'm going to try to get out here early tonight, and maybe I still have enough energy to do something else. All right, guys. I'll talk to you later. Have a good day.